Greetings, my YouTube family. Thank you so much for visiting my channel today. I just want to share with you one of the exchange traded funds that is focused on the semiconductor sector that I actually came across when I was talking to my friend in the US. Actually, it's called SMH ETF. But before we get started, I just want to disclaimer that this content is meant for educational purposes. It should not be taken as investment advice. So I will do an introduction of this fund, exchange traded funds, SMH, that is the ticker name, and also give you a background in the portfolio composition, as you can see on the screen, before I can conclude on what I think about this. But for those who don't know me, my name is Isaac Jonas. I'm a retail investor, but I am an economist pretty much, and I like investing in the stock markets, particularly in the US and in Canada. And now, um, this particular fund is managed by Van Eck, and it started trading on 20 December 2021. So this is the fund SMH. And currently, as of 27 February, my birthday, actually, it had about 16 billion in terms of assets under management. Now, this particular exchange traded fund focuses on the semiconductor sector. Remember, nvidia, Taiwan Semiconductor Company, these are businesses that have been, riding the waves, and they have been doing really, really well. So this particular ETF, it focuses on this particular sector. And when I got the data, currently there were about 26 stocks that were, part of this exchange traded fund. And exchange traded fund, for those who don't know, is a situation where investors put their funds together, and then a fund manager, in this case, the person who would be managing from this fund, Vanek, would then, manage, in terms of, buying the particular stocks or securities. They may buy bonds, or, have some cash, and then they, charge a fee for that. So in this case, the advantage of this is that it tracks this overall benchmark, which is MV SMHTR. That's just the ticker name, right? Which focuses on the semiconductor production and equipment in the US. Now, what then happens is that I like the fact that when I look at the highlights, they exclusively focus on the highly liquid stocks. You see part of the portfolio, the companies, they are very good companies that they actually buy, in this particular ETF. And they like those, companies that are in the sector that are industry leaders, and then also the global scope. So they don't just focus on the US, they also invest in Taiwan, the Netherlands, in other countries, even though it's a smaller percentage. Now, in terms of the fund details, you can see that these are the shares outstanding, about 76 million when I was recording this, and also they also have options, and they have very good rating according to Morningstar, which is a very well-known and reputable firm. They are rated as, one of the top in this particular sector. And now, in terms of the composition, SMH, it has, nvidia is, a quarter of the fund, actually, right? Is in nvidia, you see 25%. Then Taiwan Semiconductor, you can see the list, you can pause and see. So these are wonderful companies, right? So this is another way of getting exposure. So that's why I like this particular ETF. Now, when I invest in exchange traded funds, I also like to see their track record. Since it was started, it has retained cumulatively an average of 25%, which is very good. But if you look at the 10-year return, net asset value, it's 26%. So this is staggering. Actually, I was really astounded to see that this is a very good ETF, and it closely mimics the benchmark index, right, in that particular sector. You see, it's 26%, and then the index was 26%. But I think the difference could be because there are some fees that, administrative fees that, they have to charge. But stocks, they don't go up in a straight line. But in this case, it's an exchange traded fund. You can see that the benchmark is the one that is in green. So it's close. It's very close in terms of mimicking or tracking it. So you can see that there are some years, when it was down, like in 2018, like in the sector, and 2022, right, it dropped. But overall, when you uh, look at the trend, it has been doing really, really well. So if someone put or invested 10,000 in 2011, that money would be almost, if you can see here, it's almost close to 175,000. If you just put 10,000 in this particular exchange traded fund in 2011, right now in 2024, it would be almost 175,000. So it's fantastic. Now, for those who may want to buy this particular exchange traded fund, for me, I'm not promoting them per se. I don't hold this particular index exchange traded fund, but I just thought I would just share. You need a broker, you need to have some money in the brokerage account. So I use Questrade as my broker. You see that I search for the ticker name SMH and then I click buy, and you can see that it is very liquid. Average volume is about 8.51 million, which is great. And for my case, I click buy. If I want to sell, I click sell, and then I can then just finish the process and set the order. But you can see that if the shares today were going for $206.13, I would need to have $20,000 613. But of course, I can buy 2 shares or 3 shares because the fees are 0.345%. Is very, very cheap in terms of buying compared to buying one individual share. Now, in terms of the merits, this is well diversified within the semiconductor sector, but it's not broadly diversified. So if I wanted to just focus on the semiconductor sector, right? That's the difference between those exchange traded funds that mimic the S&P 500, that is the top 500 companies in the US. They are broad in the sense that they have retail, they have semiconductor sector, they have financials, technology usually as the highest weighting, but you also see that there are other sectors like healthcare. So I like the S&P 500 index. So I then buy, even exchange traded funds like SPY and XUS. Uh, sorry about that. That track the uh, um, companies that are within that sector, right? So my laptop is going to run out of battery, but I think I will be done by that time. Sorry about that. But you can see that it's convenient. Currently when I checked this out, as of January 2024, it had 26 holdings, but also which is good within the semiconductor sector. But also they are low cost. They charge 0.35%, which is cheaper compared to other buying individual stocks. When I buy one stock per transaction, I pay $4.95, whether they are 100, right? I just pay $4.95 for my broker. It depends on the broker. Tax efficient, because if I just buy and hold, I don't trigger tax liability. So this is a good thing, right? So usually there's a good thing in terms of that lower tax efficiency. It is highly liquid. Like I said, it's managed by a reputable fund. But like investing in every security, there are risks, right? You can potentially lose your money, right? So in this case, I look at the market risk. Let's say if you want to sell at the bottom, so I always want to have an emergency fund, and the money that I put in the stock market, it should be there for the long term so that I don't face the market risk. But also inflation risk. Inflation has been a bother. It was 3.1, I think, in January for the data that was released, right? 3.4% in 2023. So you can lose money, by inflation. Let's say you get 10%, so you have to subtract taxes and also inflation to get the real return. So now in terms of the credit risk, let's say out of the 26 um, companies that they have as part of this index fund, let's say one of them, let's say nvidia, declares bankruptcy and it has 25% of this portfolio of this fund. What it means, it might potentially, it can actually deplete the value, right? It can actually crash. But the good thing is it's not one company, right? So you won't lose everything if you are invested in this, because assuming other businesses that also don't go bankrupt. Liquidity risk, sometimes some companies, it might be challenging to sell and to buy. But in this case, it is very highly liquid, and they actually put this, the fund managers, that they want to buy those companies that are leaders in their industry and that are highly liquid. So this is a very good. So this particular index aligns with people who have a long-term outlook. So for me, this is something that I will definitely consider, because I did a video about SOXX, but the shares for SOX, they are quite, I think they're over 500. This one is about half of that, so I can possibly buy this, but I wait for it to drop. And right now, I don't own any shares of this. So I thought I would just share that, this is an opportunity for those who might be interested. So thank you so much for listening, and please consider subscribing to my channel so that you don't miss content like this in the future. Thank you, and may the markets be with you. And you can check out some of my videos that I've done about exchange traded funds and other content that I create. Thank you so much, and bye for now.